Good morning, Friday 30th of November. Hope everyone is well. Thought I would kick off today's briefing with a bit of a visual representation about the new political global order of power. And so, going to go straight in with this. Obviously, it's the G20 happening in Argentina. And here is a video of the French President Macron turning up at the airport with absolutely no one to meet him, and he has to shake the staff, airport employees' hands. Absolutely no one there at all. Dear old Macron, just got his wife there with him, but flying solo. Here is the arrival of the Chinese president to give you a bit of a flavour about the new global order. Here they are, Mr. Xi and his beautiful wife, coming down the stairs to the reception of... You can't hear the music, but at the moment there's a full military brigade with full marching band. And what you can't see is there's about another few hundred people in the background. So there you go. And it took Xi approximately 2 hours to walk the red carpet where Macron was shaking the baggage boy's hand. So, yeah, quite a sign of the type of world we live in, and the kind of the order of play for the G20 summit, which obviously is the critical event of not just today, but really for this year. This is probably one of the biggest remaining events on the schedule. Because ultimately this could prove to be, as Jerome Powell's speech was just the other night, quite a pivotal turning point potentially for particularly the equity markets, US based, of where we finish this year. Do we get some kind of trade truce between the Americans and China that enables then the Santa Claus rally to kick in and we finished the year on the front foot? Or does Trump continue with the pressure, and he comes out of this still talking up an escalation of trade tariffs, which could reignite then a bit of a renewed sell-off? So there's a lot riding on the conversations that are happening. And on that point, as far as timings are concerned, so this is the first face-to-face meeting that Trump and Xi would have had in over a year, and it's happening on Saturday night over dinner. So you're not going to get any kind of definitive statements out of the two until markets are closed, and really it's going to be Sunday night then when markets reopen electronically on Globex, where you're going to see the reaction to what the outcome, whatever that might be, will be on all the different asset classes. One reminder, if you weren't in the markets before, the last time these two met over dinner was when, in between I think the main course and the dessert, is when Trump was talking about how great his chocolate cake was, and then he dropped into Xi, oh, by the way, I've just sent 49 Tomahawk ballistic missiles on a Syrian airport. How'd you like your chocolate cake? Let's cut a deal. So that was the last time they met. So there's a lot, as I say, of pressure on this meeting. With that being said, just looking quickly across the charts, I've got the S&P in front of me at the moment. And obviously one of the biggest green candlesticks that we've seen in a while for US equities, and obviously coming as some reprieve for the quite phenomenal sell-off that we've had really over the last several weeks, inspired by what really was at the heart of it a fear of increased policy tightening. Being far away from a neutral rate was what the Fed was saying at the beginning of October. I think Powell's speech was on the 3rd of October. We obviously had the FANG sell-off and everything in between, escalation of trade wars. But one of the key things, obviously, that happened just the other night was this rally, because Jerome Powell has turned now more dovish, talking about we're near the neutral rate. So not going to go into it in too much more detail. We talked about it yesterday. Was this a bit of a strategic move? Because now really the ball is in the president's hands. If he wants to cultivate a renewed US equity recovery, which we know that he's very much prone to doing, because it's a real kind of go-to play for his political kind of mandate as to spread the word for how well his policies are being received in the market, then he's got to cut some sort of deal with China at this point, because if he does go ahead, then he puts in jeopardy this slight Powell recovery that we've had over the last day or so. So at the moment, just looking at the SPOOs here and the futures, you've got a little bit of consolidation post-Powell rally, and I think that could well be a decent range to just kind of play, given the fact that the big meeting, Trump-Xi for US equities, this is kind of the focal point, is not happening till Saturday night. So unless we get some kind of rumor, the other thing, of course, is Donald Trump tweeting. He has already arrived, President T, and so the GMT is -3 to London, so he should start, if he is going to be actively tweeting, from about 10 a.m. London time. I'd be definitely watching out. My expectation is that if he does start tweeting, I would expect nothing else other than him saying what he said in the Wall Street Journal at the weekend, which is that if the talks don't yield any results, then he's willing to impose more tariffs. This is kind of classic Trump style. He drip-fed that into the media at the weekend just to kind of waggle the stick, if you like, ahead of the meeting coming up. But then last night he did say, but we're very close to doing a deal with China. It's kind of the classic Trump art of the deal, if you like, in that sense. So I would say I'd be anticipating potentially this range in the SPOOs to hold, not unless, though, we hear of a kind of a definitive source talking about complete breakdown and no deal is going to be possible, or vice versa. And Trump tweeting is obviously going to be quite key. Otherwise, having a quick look at the currency pairs, kind of similar story. The Dixie's pretty flat, minor positive, so euro-dollar has crept just below pivot, which has provided a bit of resistance since Europe has come into market. But again, kind of looking down at the range from the prior day's session and the upper bound of what has been really the post-Powell rally. So again, pretty similar setup to the equities, kind of watching now. First point of call will be in the euro at around that S1 and the previous day's lows, which was also the low that we had immediately in the Asia Pac session after the Powell speech, and then the low that was seen yesterday morning at 113.62.5. So I'd be looking at those as quite key levels. In cable, Theresa May is in Argentina as well, so you might get a little bit of kind of the headline intensity around Brexit, which has been such a dominant force over the beginning part of the week, might quieten down a touch. She'll be looking to just kind of grease the palms of her global trade partners rather than kind of talking so much domestically. We've already had Liam Fox, and I think it was a BBC interview this morning on the radio, seemingly falling in line, and this is what Theresa May's been hoping for, that some of these cabinet ministers now start to play to her tune, and they can do the kind of campaigning while she's taking care of business on the international scene. So not expecting too much new on the Brexit front. I'd be looking for more potential dollar movement, I guess, on anything breaking from the G20 on the trade perspective that we've just discussed. Just looking at some of the setup here in cable, this is taking into consideration, this is the week's move here on the kind of right hand side of this chart. So I'd just be looking at what has been the overnight Asia Pac low and the low from this morning. That's that 127.81 in the futures. You've got this kind of trend line in play since Tuesday of this week. And then likewise on the upper bound, you've got the high point that was seen, I guess this was momentarily earlier this morning, which basically is right in line with the 128 handle. And then also you've got the subsequent trend line from the move from Monday as well. So a couple of things just watching here from a technical perspective in cable. Just having a look then at what Goldman Sachs have been saying this morning, because they've had a note out talking about their expectations for the China trade war situation. And their base case scenario is, first, in our view, the most likely that they see from these talks is continuing on the path of escalation. A tariff rate rise at 25%, or all imports currently under tariff, and tariffs extended to remaining Chinese imports. So GS going for their most likely scenario being increased escalation. They said a close second was a pause in which existing tariffs remain in place, but the two sides agreed to keep talking with escalation put on hold, with the least likely being a deal. I absolutely think that a deal is not going to happen at this G20, but actually my belief is that I think that what they will do is put any escalation on ice for the time being, and you'll get what will be termed a temporary truce, and then a commitment to keep talking again in the near future, i.e. the coming months. That keeps the threat there, which I think serves the kind of objective of the administration for the US. But I think China as well will be wanting to make, if anything, possibly even some small concessions at this point, just because, if anything, the economic situation in China is worsening. We had data overnight, and the expansion level in terms of the manufacturing, non-manufacturing PMIs, manufacturing itself, growth has worsened. The expansion now at its lowest in over 2 years in that respect. And we are right on the precipice of moving into contractionary territory when it comes to manufacturing in China. So not only that, obviously they've still a fairly precarious state in terms of the strength or lack of in their local equity market and in their currency, although there has been some slight stabilization on the firm commitments from the government and the central bank to kind of intervene to prop up the market. China are fully mindful of the fact that they need to manage the situation quite carefully. So rather than an all-out full commitment and pursuit of the tariffs are going ahead as per the threat in the journal at the weekend, I actually think that we might get a bit of a temporary truce will be the overall outcome. If that happens, then, if we got any noises of that today, I'd be looking for a potentially kind of bullish risk-on reaction across asset classes. So that would be equity positive, that would be gold negative in that sense, and I'd be looking to play that accordingly. But it could be the case that really those big discussions are not happening until well into the weekend, so that might be a play for Sunday. On the opposite, though, if there was that commitment to just escalate immediately, then you've got to be anticipating, I guess, a reversal of the power rally, and then ultimately, I got to say, we'd be retesting back down to the ultimate lows that we've been pushing ever since this kind of October-November sell-off. So this is the problem that Donald Trump has. He's in a bit of a sticky spot now because he's got to keep the pressure on China but also manage the US stock market. So with that being said, hence my belief that I think a temporary truce is probably going to be the likely outcome. All right, quick look elsewhere. Oil, going to talk about that as the final kind of chart. Oil had a brief run through $50. It was starting to look, quite interesting yesterday. I think it dropped down to an ultimate low of 49.41. That puts us back down to the lowest levels we've traded since 2017. And as we've said before, that does open up a clean technical break of that level. Opens up, in my view, a run down to pretty quickly 45, 42 and lower. But as per the usual interventionist tactics from the big oil producers, soon as we broke 50, Russia comes out. We're going to cut production. This is the usual kind of first line of defense. Remember, when we were at 55, when we were here, this was when the Saudis, we got a cut. Russia sitting on the sidelines. We break 50, Russia, we got a cut. So now, this for me is the kind of the strategic way of which OPEC and non-OPEC nations operate. Saudi, they will be the first to go. Russia then come in. So this is your kind of stepstone approach to keeping options on the table. For me, I still think we break 50. And then if we do, and we get a 45, that's when Trump then starts changing his tone dramatically, because at that point, that's when the North American producers, who are leveraged highly on credit for their exploration and production, they start to suffer and default, and that's a problem for then corporate America, which Trump will not want to create. So actual production emergency cuts, I don't think would start to come in unless we got to the lower bound of these levels at that point. Other than that, not forgetting we've got an official OPEC meeting happening in a couple of weeks. So really, it's about verbal defense of these levels to play some time before we get to that official OPEC meeting in December. 50 though is still critical. Technically, we had a brief, momentary kind of hour or two sub the level, but we've recovered. The question mark is if we get back down to here and we have another retest, is that ultimately from the technical kind of pressure here building, then a severe run on this could be happening quite soon. I guess the key thing to look out for here, again, circles around Donald Trump. Trump has been very clear that he wants Saudi to do more, i.e. pump more oil, so adding more supply, and hence this whole downward pressure we've had on oil to continue. So quite a key meeting on the sidelines is that Donald Trump is meeting Putin. Well, he was due to meet Putin in MBS, but Trump called that off yesterday. So again, some of the interesting things to be looking out for here is going to be the three major oil-producing powers having discussions, and do we hear anything about a potential U-turn about trying to manage this price at these levels? For me, I think Trump's going to push the narrative, which is going to put more pressure on the price going forward. So that's something I'd be looking out for. Okay, quick look at the calendar, and then I'll let you guys get on with things. What have we got for this morning? Well, one thing quickly, let me just drop in the chart of the DAX. I have just been keeping a half an eye on this as we've been delivering the briefing. We did see a gap up. Looking at the German CFD, the GER 30 here, we have just broken the weekly low, so just be mindful. Obviously the DAX, very volatile instrument. If we were to get a gap fill, that's a pretty decent move on the downside. Not really too much that's happened, but obviously maybe a little bit taken off the table in defense of potential headline noise coming out of the G20, and given the equity rally that we had on the back of Powell. Not many people probably want to be too exposed going into the weekend holding any positions given the risk factors discussed. Having a look elsewhere then, going through the morning, things are pretty quiet. We do have one interesting number, which is going to be the Eurozone CPI flash estimate. If you'll see here, expectations are for 2%. That's down from previous 2.2, but the ex-food and energy number 1.3, previous 1.2%. So key component for the Eurozone, so definitely worth keeping half an eye on. Otherwise, into the afternoon, things are pretty quiet. No 130s coming out of the US. We do have some CAD data if you are trading the loonie currency. Chicago PMI this afternoon, but otherwise a lot of attention will be on commentary, kind of sideline meetings, journalist tweets and comments on the coming out of the G20. Speaker-wise from the ECB, quite a busy slate. Mersch and Coa are speaking. Then you've got Fed's Williams, who is a voter. And I would say Fed speakers are quite key at the moment. Williams is a neutral on it, but a voter on the FOMC. So just quite interesting to see, given the timings, has the market overinterpreted the dovishness of Powell? If that was the case, then we could look to Williams to readdress the balance. So do we get a reiteration? And yes, we were right to perceive Powell in the way that we did. Or does Williams try to rebalance things and sound a little bit more neutral, i.e. less dovish? That could also materialize into potential dollar strength if that were the case. All right, that's it. Let you guys get on with things. Have a good session ahead. Have a great weekend. To the trainees in the final day of stage 3 of the program, I would say just manage yourself accordingly. Don't change anything in terms of the way that you're approaching today. Keep things disciplined, and you'll end up in a good situation, I'm sure, by the end of the day. Okay, have a good one, guys.